Hello, everyone. Let's talk about Cracker Barrel, ticker symbol CBRL. They are currently trading at their 52-week low. And if we are to zoom out even 5 years, they're as low as they were when the pandemic sell-off started. At the pandemic sell-off, every company was decreasing by 20, 30, 40, sometimes even 50 to 70%. And at that era, Cracker Barrel was trading at about $65. And today, it is trading at about the same rate. And if we were to zoom out even further, the last time Cracker Barrel was trading at its 52-week low, around $62, was back in 2012. Right there. July 2012. My goodness gracious, that's 11 years ago. Cracker Barrel is just getting a beating right now, but is it justified? Okay, so let's take a look at the dividend because this channel is all about the dividends, right? The dividend yield currently right now is 7.69%, which means for every share of Cracker Barrel that you own, they will pay you $5.20 every single year. This is a little alarming. The payout ratio is above 100%. Usually, we want to see a restaurant stock pay anywhere between like 50 to 80% just to be healthy. However, right now it is 116%, and that's because the stock has been declining rapidly. Now, to be honest with you, Cracker Barrel is a restaurant that I enjoy eating out at, and it is a stock that I own. In this video, we are going to look at the intangibles, the finances, and run some valuation models to determine if I had another $500, would I buy Cracker Barrel? So let's answer that question. The first thing that we are going to do is look at the historical PE ratio to see the PE ratio that it is today and see how it aligns with its past. But an important thing to call out is that past performance is not indicative of future gains. So right now it is trading at a 12 PE ratio, and prior to the pandemic trade-off, it does look like Cracker Barrel traded at a 15 to 16 PE ratio. And then of course during the lockdown era, the PE ratio skyrocketed to 378. So what I'm doing right now is as I look at the PE ratio with 12 and seeing historically that it did trade at about a 15 to about a 25-ish, that tells me that Cracker Barrel is trading at a valuation that is lower than its past performance. That tells me that Cracker Barrel might just be undervalued. But before we come to that conclusion, we're going to have to look at a few other things. The next thing that I like to do is I like to look at the current events and any news that might be surrounding the company, product, or service that I am investigating. And in this case in point, this market research company just very recently, Savanta, right? They surveyed 72,000 consumers on the topic of eating out to figure out which restaurant brands that they loved the most. And Cracker Barrel was, in fact, the number one family style restaurant in the country. Cracker Barrel is number one, IHOP number two, Golden Corral is number three. I do enjoy all three of these, but out of these three, I am biased towards Cracker Barrel. And if you are curious to see what the rest of the list looks like, number one is Chick-fil-A, number two is Starbucks, number three is McDonald's. That rounds out the top three. And overall, let's see if we can find Cracker Barrel before we move on to the next metric that we are going to be looking at. Alrighty, so Cracker Barrel is indeed looking a little sneaky right here. However, once I made it to the third page, ranked number 40 is Cracker Barrel Old Country Store right there. So it looks like out of the 72,000 American consumers that they surveyed, Cracker Barrel is relevant. And now let's go ahead and look at the news to see if there's any articles calling out any controversies or anything highlighting or praising the company. So it looks like the first one is a negative news, right? No, Cracker Barrel is not closing all of its stores. The restaurant closed 3 locations near Portland, Oregon earlier this year, but the establishment is not shutting down nationwide. See, this does not surprise me because I think even recently Target decided to close all of its retail stores in Portland, and I think other companies are doing the same thing. Shutting down unprofitable stores or locations is not necessarily a bad thing for a company. In fact, it might actually help it out in the long run. So after taking a look at the current news and everything, it looks like it's doing okay and it's pretty relevant. Let's go ahead and look at the next metric, the shares outstanding. Essentially, we want to see if the company is issuing more stocks and diluting the shareholders, or are they buying back shares? Buying back shares is a good thing because less shares outstanding means that each share that you potentially own is quality over quantity. So if you look at the left side of your screen, Cracker Barrel's outstanding shares. and we zoom out to 2009, it looks like there was 23 million shares, pretty consistent throughout the years at 24 million. And it does indeed look like Cracker Barrel is buying back shares. 24 million in 2021, 23 million in 2022, 22 million in 2023. And it does look like it's a trend that they are keeping up. And if we look at it from a graph perspective, here it is in 2010 at about 24 million shares. And then if we go all the way over here, it is declining. This is indeed a good thing. So the next thing that we're going to be taking a look at is the free cash flow. The free cash flow is one of the most important business metrics in my opinion. If the company is generating a profit through its operations, that is a good sign. So as we are looking at Cracker Barrel's free cash flow, we want to look at whether or not there is an upward trend, which is the best kind of thing. And if not, at least a consistent free cash flow. That is what we want to see. And in the case in point of Cracker Barrel, it does look like there are some ebbs and flows. Sometimes they do well, sometimes they don't, but it does look like they are pretty consistent for the most part, except for 2020. And that's because during the pandemic, almost every single restaurant was struggling. But if you look at 2021, it does look like the American consumer did miss eating out at Cracker Barrel. So during the pandemic, the free cash flow was sitting at 70 million. Fast forward to 2021 when restaurants were opening back up, the free cash flow did jump to 380 million. That is an increase of 436%. This is a beautiful thing to see. However, as an investor, you do want to take into consideration the macro environment and events that occurred that explain the decrease and the increase and the decrease of their free cash flow. Next up, we are going to look at Cracker Barrel's social media accounts and more specifically, their Instagram. Do their brands and products have likes and shares? So this is their Instagram account. It has 290,000 followers. This is a good thing to see. This is what their page looks like. It's pretty consistent in the message that they're trying to portray. It looks like it's a family style home cooked meal. And this is where you want to go with your family. So let's go ahead and see if there's any engagement from the customers. It does look like there's 1,000 likes on their most recent post, and there is a lot of comments following on to something that was posted 11 hours ago. Cracker Barrel, is it even a road trip if you don't stop at Cracker Barrel multiple times along the way? So that is something interesting about Cracker Barrel. They don't like to open up locations in shopping centers and in the middle of a city. Instead, they like to be strategic in where they place their restaurants, because each restaurant is also paired with a retail shop, by the way, which is kind of unique in the restaurant space. Their marketing strategy is really interesting because they are targeting people on road trips. So more often than not, you will see a Cracker Barrel located next to like a truck stop or even 20 miles outside of a city. Next up, we are going to be looking at Cracker Barrel's most recent investor relations annual report. If you do want to take a look at this yourself, just type in Cracker Barrel investor relations and look at the events and presentations and you will see it. However, here are some of the highlights that I did take away from their presentation. So something that I did want to call out, because I did listen to their most recent quarterly earnings call, is their most desired target demographic are Americans above the age of 65. However, they have been struggling to see those customers come back to the stores in the numbers that they want to see. What's making up ground for that is the younger generations. This is not their target demographic. However, Gen Z and the millennials are eating out at Cracker Barrel to kind of make up for this. And when you think about Cracker Barrel, right, I think of competitors such as Denny's or IHOP, except that Cracker Barrel is a family-friendly restaurant. Whereas you go to Denny's if you want to eat something at like 2 a.m. in the morning, or you just go to IHOP for breakfast if you just want some pancakes. But with Cracker Barrel, the experience is really different because every single time that I go to a Cracker Barrel, there is a line to get in. And when there is a line, I do in fact spend about 15 minutes browsing the retail store. So surprisingly, even though I always thought of Cracker Barrel as being a breakfast or a dinner place, their highest revenue is generated from the lunchtime menu. Very interesting. 39% of their sales are conducted during the lunch hours. My favorite meal from Cracker Barrel is actually the country fried steak going in dinner. So this is a call out. Cracker Barrel is actually really strategic about how they open up locations. So when you look at this map, Cracker Barrel still has a lot more room to grow. And this is absolutely an understatement because when you look at the East Coast, it does look like Cracker Barrel has a good presence. But when you look at the West Coast, there is so much room for expansion. Now, the last thing that I want to talk about from this presentation is how selective and careful Cracker Barrel is when they open up new units. So this is how many locations that they had in 2011. 603, right? This is not a company that is just opening up stores left and right and praying and hoping for the best. Instead, they are very strategic and careful about launching in a new location. I think the leadership team is doing a very good job of calculating the ROI and demand before opening up units. So year over year, you're lucky to see maybe 2 to 5 new locations open up. And as an investor, this is a good and a bad thing. It's a good thing because the company is forecasting properly instead of being reckless with their budget and expanding too quickly to fail. But it's also a bad thing because Cracker Barrel is a lot more dependent on each location that is already existing to do well in order to increase the revenue and profit and free cash flow. By the way, not sure if you know this, but Cracker Barrel is also the parent company of the Maple Street Biscuit Company, MSBC. And currently there is 51 locations of that, and of Cracker Barrel there's 664, which, by the way, they just opened one up in my old hometown of Reno, Nevada. All right, so before we move on to the valuation models to find an intrinsic value for Cracker Barrel to see whether or not I'm going to invest the $500, we are going to be taking a deeper look at technical indicators and do an analysis of the stock price movement. So there's a few things that I'm looking at here. The stock trading pattern. Is it moving upwards or is it moving downwards? Is there a line of support? Is there a line of resistance? And most importantly, what is the current relative strength index? Traditionally, a RSI above 70 means that the stock is overbought. When it gets below 30, that means that the stock has been oversold and it might be a good time to buy. When I think about the RSI, I always think about what Warren Buffett said, which is to be greedy when others are fearful and to be fearful when others are greedy. So let's go ahead and take a look at the past 12 months. It does look like Cracker Barrel is sliding downwards and there is a line of support. So do you see that darker colored line? Not the light blue one. The darker colored blue line. It does look like every single time that Cracker Barrel hits it, it does move back up a little bit and it never goes below that lower Bollinger Band. And if you look at the RSI, oh my goodness, back in September 27th, the RSI reached a 14.99. Now, if we zoom out and look at it from a 5-year lens scope, it usually trades at about a 50. A company should always be hovering at around 50 unless you're Apple. It does in fact look like Cracker Barrel did trade at around a 50 RSI, and then during the pandemic sell-off, it did reach a 16 RSI. A 16 RSI is below that traditional value of 30, which means it was oversold, which during the pandemic sell-off, everything was oversold. So when you look at today, the RSI in comparison to the pandemic does look like it was a 25. It is below that 30. So what I am looking at as an investor is realizing that although Cracker Barrel is trading in a downward pattern, it does seem like it is oversold right now as an overreaction to the macroeconomic trend and the looming recession. If I were to make an educated guess based on the technical analysis of the stock trading pattern, I would say that the stock is probably going to be trading sideways until we do get some good news about the recession. Alrighty, so now we are going to be running some valuation models to find the intrinsic price for Cracker Barrel, but also comparing that to the Wall Street analyst price target. So the first thing that we're going to be looking at is the multiples valuation. Essentially, we are going to be looking at companies that are in the same industry and seeing how Wall Street prices them. The first company is Brinker International, ticker symbol EAT. They are the parent company of Chili's and Maggiano's Italian food. By the way, Maggiano's is actually delicious. Brinker's stock price is at $30 right now. PE ratio is at a 13. We have Wingstop. Darden Restaurants is actually the parent company of a whole folder of different restaurant brands. But the most popular ones are probably going to be Olive Garden. I know it's not really Italian food, but I actually really enjoy eating at Olive Garden. The breadsticks, sometimes they're stale, but I love them. And the unlimited soup and the cheese, yeah, I'm a fan. And they also have Cheddar's Scratch Kitchen. I'm not really a fan of that place, but that is the two most popular restaurants under their portfolio. And then next, I put Denny's, which, as you know, is the breakfast place, PE ratio of 12, and then Texas Roadhouse. So we have the low of Denny's, their PE is at a 12, and the high of Wingstop at an 83. So when you take the similar companies in the same industry, the average PE is sitting at 29. However, to get a more accurate depiction, I always use the median. So with the median PE being 16.66 and taking Cracker Barrel's current earnings per share of $4.45, this is the intrinsic value based on the multiples valuation based on the similar companies in the same industry. So $74.17. So now let's jump to Cracker Barrel's discount cash flow analysis model. This is going to calculate for us the price per share based on future free cash flow production growth. So I went ahead and plugged in the data year over year of the free cash flow from 2017 all the way to 2022. Some people like to do like 10 years or even 15 or 20 years. I don't like to go that far back because most companies are not applying the same operations or marketing tactics that they did in 1997. But anyways, looking at the free cash flow growth year over year, it does in fact look like the average growth rate was sitting at 61.32%. However, we know that is a fluke because do you remember how we talked about it earlier? 2020 to 2022, very wonky numbers with the pandemic, closing restaurants, opening restaurants, closing restaurants. So with that said, I decided to plug in the average growth rate predicted by the analysts of 10% because 10% sounds a lot more reasonable. So after figuring out the growth rate of the free cash flow, we plug that in to determine what the free cash flow is going to look like in the future and then deriving a terminal value. And here is the sum of the free cash flow in the future. And then we look at their current balance sheet to figure out how much cash and cash equivalents that they have on hand and their total debt, subtracting that from the sum of the free cash flow that you see right here. And the equity value that we reached is 1654. And from that, we divide it by the current number of shares outstanding, which gives us a stock price of $74.64. That is the discount cash flow analysis model intrinsic value of Cracker Barrel. So moving on to the dividend discount model valuation for Cracker Barrel. Essentially, the DDM model tells us the value of the stock based on potential future dividend growth. So basically what I did is I took the quarterly dividend payouts, and in 2019 they paid $1.25 per share every 3 months. In 2020 it was $1.30, but because of the pandemic, I think the leadership made the right decision to not increase the dividend, but were consistent from 2020 all the way till now. An interesting thing about Cracker Barrel is that prior to the pandemic, Cracker Barrel used to reward its shareholders every single summer as a thank you of a special dividend that is like 300 to 400% of the quarterly dividend. So if we go back in time and look at, for instance, 2016, right? They were paying $1.10 per share every 3 months as a dividend. And in the summertime, they were like, hey, the business is doing so well, the operations are crushing it. Here is a special dividend for you as a thanks for holding the stock, $4.40. And then the pattern continued in 2017. Every quarter they paid $1.15. But then in the summertime, they're like, hey, we're doing really well. We have extra cash on hand. Here it is, you dividend-loving investor, $4.70. And in 2018, they gave a special dividend of $5 per share. So that is something that you want to keep in mind. I think once Cracker Barrel gets back on track and they start crushing the metrics and their operating margins and revenue starts going back up, I sincerely hope that the leadership team will come to a conclusion to give those special dividends again. So anyways, looking at the past 5 years, we are seeing that the dividend growth rate is sitting at around 1%. However, prior to the pandemic, it does look like Cracker Barrel really increased their dividends at an aggressive rate. So like from 2014 to 2015, they increased it by 10%. So by looking at the company's dividend history and looking at what our data tells us from the past 5 years, I went with a conservative number of 3.5%. That is what I predict that Cracker Barrel will increase their dividends year over year at 3.5%. Realistically, it's probably going to be closer to 5 to 10%, but I do want to be conservative instead of trying to paint a Picasso portrait. So, based on our DDM model, we do reach a valuation of $119.60 per share. Now, if we go back and take a look at the stock, is $119 out of the question? When we zoom out 12 months, it does in fact look like the company did used to trade at about $120 per share. And when we look at what Cracker Barrel was trading at prior to the pandemic, in July of 2019, it does look like Cracker Barrel was trading at $178 per share, a low of about $154. And then, of course, when the pandemic happened, they got absolutely crushed to $65. And right now, we are seeing that same valuation. It does, in fact, look like $119 is reasonable. So the next model that we are going to be doing is the Benny Graham's valuation model. And this is going to tell us the share price based on its potential growth and based on the current bond yield rate. Now, Benny Graham, if you don't know, was Warren Buffett's role model and mentor. So looking at Cracker Barrel right here, and their current EPS is sitting at 4.45. I did go ahead and plug the growth rate projection from the analyst of a 10.34, and the current AAA corporate bonds yield rate is a 5.4. And right now, it is actually indeed very high because the federal funds rate is very high. So when we plug all of this into the formula based on the current AAA corporate bonds yield rate, it does tell us that Cracker Barrel is worth $62.87. However, whenever I look at the Benny Graham's valuation model, I always think of this as the bear case. Because more often than not, out of the four metrics that we looked at, the Benny Graham's valuation model always gives the lowest intrinsic value. However, let's look at when times might go back to normal and the AAA corporate bonds yield rate goes back to around 3% at its historic rate. When that happens, it says that Cracker Barrel, as a bear case, should be sitting at around $113.17. That is not the case, and we cannot predict the future, so we are just going to go ahead with the current AAA corporate bonds yield rate of 5.4. So with all of that plugged in, we have finally reached the conclusion. Is this going to be a delicious dividend or a disgusting one? So let's go ahead and reveal the final numbers. This is what we have all been waiting for, and whether or not the hypothetical $500 are going to be buying Cracker Barrel shares. So the Graham's valuation, this is going to be the lowest out of the four, $62.87. The multiples valuation based on companies in the same industry says $74. The discounted cash flow valuation, $74. And the DDM valuation, $119.60. So when we take the average from the four model valuations that we did, the intrinsic value that we reached and concluded is that Cracker Barrel should be worth around $82.82. Now let's see if the number that we concluded from our research aligns with what Wall Street analysts have to say. Wall Street says that Cracker Barrel is worth $90.44. So at its current trading price, there is a 33% upside based on their price target. The low is $66. Their high is at $126. So it looks like with our numbers that we ran, we are a little bit more conservative than Wall Street. They say it's 90. We say it's worth 82. Its current trading price, let's plug that in. I just went ahead and put $63 because it looks like Cracker Barrel is going up and down day to day. So I'll just go with the bear case. So let's go ahead and assume that Cracker Barrel's current price is trading at $63. And then let's go ahead and play with the margin of safety to see when is the right time or the right price to jump into Cracker Barrel. So the minimum margin of safety that I feel comfortable with based on my risk preference is 10%. I try my very best and attempt to not pay too much for companies because I am a value investor and a dividend growth investor. So when we apply a 10% margin of safety to the intrinsic value of $82, our acceptable buy price would be at $74. Its current trading price in this hypothetical situation is $63. I think it's currently at like 67, but based on the past 5 days, it did go back down to like 63, jumped up to 64, 65, went up to 67, went back down. So I'm just going to go ahead and assume this 52-week low. But let's go ahead and say you are a lot more conservative. Then let's go ahead and apply a 15% margin of safety. At 15%, then your buy price will be sitting at $70. And the stock price is indeed below the $70 for that 15% margin of safety. Now, if you really want to play it safe and you're conservative and you don't like taking risks, let's go ahead and apply a 20% margin of safety. At a 20% margin of safety, the acceptable buy price for you would be $66.26. The stock price is trading at around this valuation. However, if we do want to see what it would look like to get down to that 52-week low of $62, at a 25% margin of safety, Cracker Barrel trading at its 52-week low of $62 does seem fair for you. So this is the conclusion. If I have $500, would I buy Cracker Barrel? What I would personally do is probably dollar cost average into it as it trades lower or sideways. I wouldn't go all in at its current price. I would probably wait and see how it does. And if it does indeed trade sideways, just buy stocks little by little. This is not financial advice, and please do your own research and due diligence if you are interested in Cracker Barrel. And if you liked what you saw here today, please consider subscribing. This is Dividend Compounders with Cheese checking out. I'll talk to you next time. Take it easy and stay safe.